Hey guys, welcome to the Stocks with Josh show. So yesterday we saw that the CPI was 6.4%. This was not the 6.2% that the analysts were expecting. Initially the markets shook it off, stayed kind of flat, but then the selling began due to the fear of stubbornly high inflation. The main concern behind that, guys, is that the analysts are assuming that if the economy cannot get to the Fed's 2% goal, then there's going to be no Fed pivot, no pause, or no ease. We need to see inflation get tamed for there to be any bull case moving forward. Their fear is that the number actually could have been higher, though, at 6.5%. JP Morgan analysts said that if it had come in that high, that the market actually would have sold off 2.5%. The report was largely better than feared, but still not good enough to extend some serious buying to move the markets higher. Now I'm going to go over a couple solar stocks that had big moves in recent days. Even if you guys are not in these solar stocks, I think it's going to be interesting to check out the charts and to see where they're going. About 2 weeks ago, I notified my chat group that I was tracking First Solar to go short. I was a bit early when I started my first put position around $180 to $182. First Solar popped up to $185. I got a little freaked out. I got out of the trade. I did, though, roll one of my options forward to keep an eye on it. That one option is already up 300%. First Solar has been a falling knife from its recent high of $185 down to $165. This morning, First Solar was downgraded by Evercore, causing the stock to continue to sell off down another 4.6% today. They gave it a price target of $157. Now that's below the current price. First Solar was running up because they were the biggest beneficiary to Biden's spending bill called the Inflation Reduction Act. Now, I've said it before and I'll say it again. You cannot fight inflation by spending money. It's like trying to fight a fire with gasoline. Anyways, if these guys are going to get a ton of money because of Biden's bill, why is the stock falling? It's because they can't scale their business to maximize the windfall of government cash. They're on back order right now until 2025, all the way to 2026, and that back order includes their plans for scaling until 2025 and 2026. These guys desperately need an Elon Musk maverick to step in and show them how to scale a business. You know, they've got all the money in the world, they can't get the products made. This was another killer call that I made, but I was early on it this time. I'm sharing this with you guys as a reminder not to overtrade. If you had sold your SQQQ this yesterday morning when the market seemed to be responding favorably to the bad CPI number, only to be out of the trade when the NASDAQ fell later in the day, you'd be pretty mad. We're trading confused markets, so we've got to keep to our trade plans. Bottom line is that in the morning the markets may be up, and in the afternoon they could be crashing again. The micro trend, though, I'm going to reiterate, remains bullish until proven otherwise. So let me give you guys some quick technicals on First Solar and enph. I'm going to cover enph because that's actually how I began to cover First Solar. I had some trading with enph successfully, and that brought my attention to First Solar when they ran up. I think First Solar is going to continue to be bearish. I think it actually could fall as far as to $114. Now I'm expecting it to backtest up to $173.50, and that's where I'm going to add some more puts to go down. I'm then anticipating a move down to $145. Now I'm likely going to take profits there, but I'll be watching to see if it breaks support at $145 because it could go all the way down to $114. Now enph energy looks like it's consolidating at its current level, but if this area breaks down further, it could fall as low as $176. Now I know there's a lot of people that are in it going long and they're thinking, wow, Josh, really? $176? I'm going to say yes. There were people asking me about taking calls because of the big pullback, but I advised against it and it's continued to fall. I would only consider calls at the conservative entry price of $180 on enph. All right, today I'm going to share with you guys a breakdown of an investor letter that I found fascinating from a group called Bumbershoot Holdings. These guys have basically made their clients 100% return since the beginning of 2015 when they start. So all the money that has been invested in them, they've brought 100% return basically in the last 7 years. I think it's very impressive. But what they've done in 2022 was the most interesting, which is they actually gave their investors a return in 2022. It was modest, but they didn't lose money, and that's what's critical. They ended 2022 up 1.2%. Which isn't anything to balk at, considering what a terrible year it was for so many. Consider the likes of Cathie Woods and ARK Invest. They led a multitude of trusting investors to financial slaughter. The ARK Innovation was down 80% by the end of 2022. ARK Invest's top 20 holdings lost 50% in 2022. These were just not good calls. She was basically enthusiastically recommending buying when she should have been enthusiastically recommending their clients to sell and to lock in profits. Now I'm going to break down my top observations that I think we can learn from this Bumbershoot group and this interesting client letter for you guys today so that we can learn from their success. And then at the end, I'm going to give you guys some quick technical analysis of ARK Invest funds. Is it worth buying? Before I begin, thank you guys for hitting the like, subscribe to get daily stock and crypto videos with real substance. If you need better investment tools, go to the link in the top pinned comment and open and fund an account with the Moomoo investment app. You're going to receive 15 free stock. You can screenshot the exact offer for all the details, click the link, get your free stock, start your investment journey today, and then the best part, come find me and my friends on the chat group that I host on the app called Stock Josh Fam. So what lessons did I learn from reading Bumbershoot Holdings investment letter? 3 that stood out to me that I'm going to share with you guys from this winning, not losing team in 2022. Number 1, having the right overview of the market. This is theirs. They believe that inflation is a global endemic, which simply means that it is native and it will continue to be persistent. They cite that this is a natural relief valve for the faulty monetary policy. Basically, excessive government spending combined with prolonged Fed easing is the problem, and if it persists, then the problem remains endemic. They go on to say to their investors that you simply need to take a longer view of the markets. They're less concerned moving forward with inflation as they are with deflation. They made it very clear that deflation is the true enemy of the Fed as well as long-term investors. Deflation, they said, is the real risk to growing long-term wealth. So their second point, how did they achieve this success of not losing bags of cash like Cathie Woods and ARK Invest? Well, they went to cash and stayed in cash, exercising patience in the face of uncertainty or when the markets were simply unclear or confused like they are right now. So I have a small group of investor friends. Larry Jones is one of them. We all went to cash in the majority of our trade accounts quarter of 2022. That decision undoubtedly saved me very large sums of money. And if you ask me why I had the foresight to do that, honestly, it was just experience. If you've traded through historic recessions like the dot-com bubble and the Great Recession of 2008, 2009, you kind of can read the environment and more easily predict the coming storms, or at least you're more afraid of losing a ton of money. I know from personal experience that most people don't have the discipline to sit on cash. I know this because when I first started trading, I was the exact same way. Beginning traders all make the same mistake, which is to force trades. I often refer to this in my chat group as over trading. Bumbershoot's holdings' number 1 reason for success was the discipline not to trade in an unclear environment. The opposite of what Cathie Woods did when she bought every single leg down on the dip. Now, she did actually eventually get it right when she bought up the tech dip at the end of December and the beginning of January. So you too could be successful by buying the dip as long as you don't run out of money. Cathie never runs out of money because it's not her money. She's using investor funds. That being the same investors that lost $50 billion in value in 2022. Now, I'm not picking on Cathie Woods. I'm just trying to learn from her mistakes. The other factor that Bumbershoot gave was timely rotation into healthcare. There's an important observation to be made there. They weren't married to specific stocks, ideas, narratives, or singular paths to be successful. One of the biggest problems that beginning investors have is getting too attached to individual stocks and holding them too long. Some of you have done that. Let me know in the comments what stock that you've held too long and if you're still holding it. In their investor letter, they go over the biggest losers, which I also found interesting. 3 of their biggest losers were Google, Micron, ticker MU, and gold. I gave a warning on my page regarding gold back in August of 2022, that gold does not always do well in a recession. In this last recession, regardless of what Ray Dalio said, and I am a fan of Ray Dalio, cash remained king for 2022. The gold army is as bad as the meme stock army. They always buy the dip. Yellow metal has been best used for jewelry, not investment, in the last couple years. It's been a lagger for at least 2 years straight. Now, I know that's going to make some gold diehards mad at me. On that note, this is not financial advice, and so as I like to say, you do you. So in conclusion to their investor letter, they said that this year looks very similar to last year, and they gave a best and worst case scenario that I found extremely interesting. Best case is the Fed raises rates, inflation is tamed, job market does not get damaged, and we move from a decade-long economic expansion to a mild recession. Worst case, the Fed flips the board game by hiking rates too high for too long, crushes inflation, and the market gives back all the gains from the recent years of expansion. So what is my conclusion after the CPI report we just got? Inflation is clearly still an issue, and I do not see a non-recessionary path that would allow the Fed to pause, pivot, or ease. What that means for trading is, like I said yesterday, we may remain range-bound until the data and path of the Fed can be better understood. The key question is, what will the terminal rate be? And I think that could take easily another 2 months to determine. The Fed never wants to beat inflation too badly, because like I said in the beginning, the real threat to wealth is deflation. All right, my final thoughts in just a moment. Let me give you guys some quick technicals on ARK ETFs. It seems to me that a lot of stocks are still going to go back and have to backtest their 50-day moving average, which for ARK Invest would bring the stock down to around $37. I actually am going to call it a buy at that level. We'd have to assume that it would bounce from there based on everything we know about the markets today. ARK is oversold, and I see it steadily moving up from this level. And it wouldn't shock me if it were to get as high as $96 by the end of this year. Let me know if any of you guys own ARK in the comments and what you think of that prediction. All right, final thoughts on the day. Even with the bad CPI number, the market is still actively calling the Fed's bluff that we will not actually be able to keep rates at 5% for any significant period, which means that if you are trading with the smart money and they are trading 6 months out, between today and the next 2 months, we need to start pivoting in anticipation of the inevitable Fed pivot that's ahead of us. That's why buying got out of control in January. Those were early buyers. If the Fed doesn't pause, pivot, or ease, it would be a disaster to the casino economy that we currently have. So high volatility ahead, a rising VIX. That's it. That's all I see today. Anyways, I hope you guys enjoyed these insights and technicals. Hit the like and subscribe to join the Stock Josh fam community. I wish you all great success in your trading. Peace and blessings, my friends, until I see you in the next video. Take care.